Are you going to be like a hostile witness today?
No.
Man didn't get his free coffee this morning.
I'm going to be fine.
Okay. The witness has been sworn in. So I have a question for you. Everybody says to be globally diversified, and international stocks have been horrible, it seems like for almost 10 years now. Is there really value to being diversified internationally, or should we just be more traditionally U.S.-centric?
Well, it had been horrible for 10 years. Non-U.S. outperformed last year by a significant margin. Emerging markets are up over 30%. But it comes down to, why are U.S. stocks outperforming? Are they outperforming because they're growing faster in terms of their earnings? Or are their dividend yields higher? Because you have to look at what drives it. Or is it are they getting more expensive? And when you look at the last 10 years, U.S. stocks have gotten more expensive than non-U.S. stocks. And that's what's driven the outperformance. The dividend yield's lower, so it's not the income. Mm-hmm. Now, in the last year, with the tax cut, corporate profits have been double digits, almost 20% for U.S. stocks. So you do have the profit aspect, but the primary thing has been you have U.S. stocks selling for price to earnings ratio over 20. Non-U.S. is much, far below 20, and so that's the driver. And so then the question is, going forward, will U.S. companies grow faster than non-U.S., or will the valuations fall? And I have both. I think most people should have both. I think 56% of the world is U.S. If you have more than 56% of your stock portfolio in U.S., then you're overweight. And so then you have to question is, why am I overweight? Is that justified? And some people say yes, others no.
Yeah, and I agree. And it's not really about predicting which one's going to work and which one's not. It's just you have more diversification, and which means the negative to diversification on the short term is one is going to seem much better than the other, and you're going to feel like you're always being left out in some way. Because if you're globally diversified over the last number of years, you sort of feel like you're getting dragged down rather than participating.
Well, you are, and that diversification is something's always underperforming if you're diversified. But the issue is, if you are globally diversified, you want to own the world.
Right.
And so you want to own the world in the world's percentage. You want to own the market, and the market is 56% U.S. And so to the extent that this idea that, and even if you're in an index fund, because people say, well, I'm passive invested. Yes, you're passive investing, but as soon as you have most of your stock exposure in U.S., that's not a passive bet. That is an active allocation bet to be significantly overweight the U.S. And as long as people realize that,
well, even the people that advocate being globally diversified equity-wise, they say, well, you should have a 15% allocation to international stocks to complement U.S. stocks. But to your point, if it's 44% international, it should be, if you truly want to be globally diversified and believe in global companies and everybody's participating, you should have the world much more than people typically do, even the ones that advocate for international.
Well, right, and because people, they have home country bias, they're more comfortable. I mean, think about if you're a Canadian investor. Canada makes up 3% of the world population. So should Canadians only have 90% of their stocks in Canada because they live in Canada? No, most Canadians have far more outside of Canada because Canada is such a small part, and Canada's stock market is very much dependent on resources, oil, energy, and things like that, and so they're diversified.
Yeah.
But the U.S., we tend to think, well, U.S. is the biggest economy in the world, so that's all I need, and I disagree with that.
Yeah, I do too, and probably a lot of the issue is, and this is a media-driven thing, and just we've been trained, we always mentally evaluate our portfolio based against basically the S&P 500, right? So it's apples to oranges, but we don't even appreciate.
Right.
Yeah, so we always feel either good or really like we're underperforming, like lately.